Getting going here in a second, guys. YouTube's giving me a hard time getting locked in. Maybe it's not going to happen. I guess not. Okay, let's get going here. All right, so pretty much the markets gave us what was expected yesterday, and that was like a whole lot of nothing. Jiggles up and down and couldn't get through this resistance area right there. But it didn't drop either. So just chopping sideways, and we'll see what happens here today. We still got another day of this circus going on the TV. And as I mentioned yesterday, the last time that they had this going on, the markets were just kind of flip-flopping around for the most part, kind of waiting to see if anything was to come of it. And so, yesterday seemed like it was a whole lot of the same, let's just say. Anyway, so markets are up here a little bit. And so, that's constructive if it could really take out, I guess, this high over here on the 24-hour chart. He was, Paul. He said, I didn't vote for him. He wasn't my guy, but this is the history and so on and so forth. So, yeah, it was all good. And the others were so obviously tainted, It was pretty terrible, the whole thing. Anyway, we'll see what happens. What's going to happen? They're going to impeach him, right? They're going to impeach him over there, and it's going to go to the Senate, and that's going to go nowhere. But anyway, it's politics. So, if the spiders can get through this level, as crazy as it could seem, it could have a sizable event. And so, obviously that's the support. And as we always do, we have our kind of subjective reference point of the halfway point of the big red bar as being a point to say, well, subjective reference point, but an objective point to say, if this can retrace more than halfway into that bar, well, that's starting to neutralize the message. Not completely. Well, it depends on how far it gets halfway into the bar. So we'll see if that's going to happen today. But, if it can get through there, right, as you can see, when we say it's subjective as a reference point, because there's, as we can see in here, there's no real price resistance. But, at some point, people start to short or say, hey, this was a nasty drop. I can get most of my money back. Let's just be done with this thing. And, that is going to happen, but is it going to happen to a degree that rolls prices over? So this is where we would look is to see if we get a red bar or a topping tail or 2 days of sideways and then a drop and so on, which would set up a short that theoretically could take out this low and head it lower. That would create this as a new pivot low after there's 3 days to the right. And so while that wouldn't become major support unless it was a new high, but a new high would totally negate this drop, right? And we just go back to, oh yeah, this is the schizophrenic market and so on, so that's kind of stuff that we've seen. So it's still in the development stage of what's going to happen here. Do we get another sideways, price action here? And if we do, of course, as always, it comes down to, well, can it get above it or does it get below it? Now, based on the drop and violation of the uptrend on the daily time frame, if this was to form a double top on the hourly and start to break, we're shorting, right? With a initial target down here. And then we'll see what happens when it gets there, right? If it gets there, whatever. We never know how far it's going to go, but that would be the targeted zone to test that level. And then does it become a W bottom? Does it break down and head down to the next level, right? So we come up with scenarios, right? That's what we do. And this is what I would say. Okay, 300 is the big round number. And this little congestion area right there, that pivot low, that would be my downside target somewhere in here if we did break through this level and get the sell set up, so on and so forth. And that's not going to happen for a few days, next week. So we'll see how that all unfolds. But right now, we've got two pretty good lines in the sand. And I put this line there as our subjective reference point. But our two significant lines in the sand is this pivot high. And for the moment, the day before yesterday's low. And so in other words, beginning of a trading range here for the moment. Right? All right, back and forth here. All right, Qs, same thing, right? Yesterday popped up in there and went nowhere. What are they doing here now? They're up a little bit and just chopping around, just waiting to see what's going to happen. December 15th, things, well, we see how things change, Paul, in the past where, Trump was going to increase the tariffs and then he backed off from it. It's a kind of a moving thing, which leads to the uncertainty within the markets as this whole story has unfolded this year, and where it's day to day. I turn on the trading platform and they give you a little, line of various news events, and one day it's markets are down on China, blah, blah, blah. And the next day markets are up on China hopes. It's really a joke. But that's what we're dealing with right now. So what same story here. We talked about weekly uptrend. Now we'll see where this weekly bar ends up as a bottoming tail, or maybe a big red bar. Right? We'll see how this all unfolds. S&Ps, obviously same story. It came down to minor support. It held, it pushed up, which makes this a significant support level on the hourly time frame. So because it made a new high, right? And now it just moved up to the upper part of the range there, and it's backing off. But now we've got a little uptrend going on here. And if it can clear this level, then we see if it can pop into the void. If you measure top or bottom. Well, we should never look at things in that way if we measure top or bottom. Right? Only when it's to his advantage, right? So 30-30. 30-30. That's what we talked about yesterday down here. Remember, it's always an area. Right? Support and resistance is always an area. So, rather than actually putting diagonal lines, you can put a little box in there or two lines and just say, look, somewhere in here. The whole idea or concept of Fibonacci levels and trend lines and Gann lines and, square of nines and all of that hocus pocus is not the kind of trader's mindset that we want, to think that, oh, this has to be an exact point. That's a trap. No, we look at things in a looser way to say, look, somewhere in here makes sense. Now, that location is where I want to see a certain picture. That's what it comes down to. Show me a picture in the location where it should be, and then determine multiple time frame analysis for a bias as to the probability of where that picture could take us, right? And then we bring in our fail patterns and relative strength and relative weakness and market internals and so on and so forth. Has been top of the last two drops, June and September. June. Oh, here. Right. So that is, Clint, that is what we call, obviously, is minor support. But we also, right, say that is a subjective reference point because it's beyond what's directly to the left. So as we drop down to a smaller time frame right here in the October area, right? You see the date down there around October 21st, give or take, somewhere in here. And we look at October 21st or so, we come to this area right here where taking an X-ray into this point in time, we can see this was the reaction to what was actually the resistance at that time. So this is how we really understand support and resistance, and the concept of minor support and resistance is to say, yeah, I know, because how I'm explaining it is that what's beyond directly to the left is subjective. Why do we even use it? Well, because as we're looking at this time frame, it does give us a reference point, but we also know that the odds are really high that there was going to be some type of reaction when it got up there, because that's just how technical analysis 101 works. And so then we go to the smaller time frame, open up the data, take that X-ray to see, was there actually a reaction? And so now here is the reaction, right? There's the number 3024, give or take whatever you want to draw the line. That is the reaction. You can see here and here, but you can't see it over here. But I can see it on the daily. And so now I understand why, if it gets down here, why this reaction is likely to happen, because of what's directly to the left, not what happened back in July and September, So it was for me, and I think for everybody, becomes very enlightening when you really understand why some reference point from months ago, right, actually comes into fruition of this, which seems kind of unclear, let's say, as to why it actually happened. So everything that, MTS, which is my education, my self-education over the last 30 years, is how to take the mystery out of technical analysis so that it makes sense without the confusion. And I think that's the power of it, eliminating the confusion. And indicators are mass confusion, fib lines, oscillators, MACDs, squares of 9, Elliott waves. I like to use the word brain damage. It is, because you're always second guessing it. Let's get going here. I'll take all of Dan's time. So same story over here. That's what's going on. We'll see if we get the cell set up. If it can clear here, got room to run. The further it runs, the more it begins to negate this, has to be respected as a pretty powerful drop in the moment. And there's a lot of damage stocks as things went down here. So does it repair the damage, or are we going to get the next leg to the downside? Dow, right, stopped right. Well, not right. Got kind of getting up there near the 20 there, where I put the little box yesterday, and you can see okay, just like the 20 MA is subjective, minor support and resistance is subjective. Quantify the moving average. Look to the left. Is there something there, or is that just a subjective line that we put on a chart because we decide to use a 20 simple moving average? And this is where people get into, it stopped right at the 22 exponential. That's the one to use, not the simple. And then you go to the next chart and it doesn't work. Why? Because is there actually something to the left there that's real price versus a line that moves around based on your choice? Right? So we'll see if it gets through that same story. Damage done, weeklies in an uptrend, so on and so forth. That's the factory work, when you understand how to put together the factory work. All right, so here's the Russell futures. We talked yesterday that, this could outperform. It outperformed by not dropping as much, but it went higher, so it had more room to drop without violating support in a significant way. I want to say the damage needs to be repaired with the big bullish up or grinding up. Well, by definition, Tony, a big bullish up is more powerful, right? Because of the speed of movement. That tells you that, the mass buying that was going on overcame the whatever supply was there, versus a grind to the upside. It did grind through it. So the big bullish move up is power, but it's also what I call the weakest link, meaning a fast move up creates a void below. So now the demand has to continue to create new support to drive the next leg up, because if it doesn't, it can fall all the way back down because there's nothing to trade against, meaning price support. Whereas the grind up makes it very difficult in a sense to think about shorting that, because you've got all these different reference points of support underneath. In either way, if they both retrace significantly into the drop, that part of it is bullish, regardless of how it got there. We're just seeing how it got there differently and how the reactions against that move is likely to be different. So we just need to understand that. And this is why in the gap course, I talk about looking inside of a bar, like a wide range bar. Well, what was the structure inside that wide range bar? Meaning, how did it get to the top? Did the move happen at the beginning of the day in base? Did it move at the beginning of the day in base? Did it base throughout the afternoon and rally in the latter part of the day? All of those things, or either of those things, give us guidance as to what the reaction is likely to be from an intraday trading point of view. So as trading gaps, looking at that, from in that way, guides us to different biases based on the intraday time frame. So kind of long definition, but what your question was, which always tried to give more insight as to your question and take it to another even advanced level. Creating support and resistance is more solid. Well, if so, the idea, Tony and everyone, is if it moved up fast and it creates support, when do we know it's support? Right? When it clears it and goes higher, right? So creating support after a momentum run higher is bullish, but it actually has to continue. So, and then that's where bar by bar analysis comes in. It's 9:21. Can't turn this into a coaching session, but let's get going because I got to give Dan his time. Wow, this is what I'm talking about. Wide range bar is the weakest link. That said, this was going to go lower, and that's why we talk about the 50% level in the wide range bar being, hey, if this is really weak, it's going to create resistance and roll over. It went sideways and it started to move up. It blasted up because there's nothing there. And then it stalls at resistance. Right? This analysis it's simple, but everyone is inundated again with this indicator methodology that just gives them brain damage and they resist looking at the simplicity of this type of analysis. It's frustrating to me because I went through that for years trying to figure out the indicators and the combination of them. And wow, what a pain that was, painful time and frustration. And, when I removed all that noise, it's like, wow. Anyway, bonds coming back down again, same story. Look, blast off into resistance. It stalls. Now you have to create support to be able to go higher. It couldn't. It tried here, down again. There's nothing to trade against, down again. Now when it gets here, it's going to stabilize.
Hey, Greg, show them that beautiful M top. That is textbook M top. Textbook.
Right out of the court, because this one is preceded by a momentum move. And that's why we look at M tops, because there's nothing underneath it. Right? Of course, it's great stuff, Chip. This is what I've been trying to tell everybody for the last 25 years, and the people that take the course, they come out of it like, wow, Peloski's. I'll continue with that another time. Gold down a little bit here. I got my alert down here in the middle of the 50% line there. This is what's great about this particular platform. You put an alert and you just move this line around and adjust it. So that's pretty cool. I don't know. You can see it blinking as it's making the adjustment. Pretty cool what that does. So nice W bottom. There's the void stalled at the overlapping bars. Silver, same. Not quite the same. Anyway, I want to give Dan his time here. And
No, go for it. No, that's good stuff.
well,
All our opens are closed.
and so, always look at the transports. I was hoping maybe, from the bullish point of view, they could clear that and go up, but it didn't happen. Now we need to see if they can hold this major support level. And if they don't, well, there's an unfilled gap down here. So, we keep an eye on all these moving parts and this news-driven market as it is, the schizo market. It definitely makes it more difficult to have confidence, but we look at the charts and it is what it is. So we just have to deal with it. It'll change at some point, and who knows what next year is going to bring. I guess the expectation is this impeachment thing, as it gets to the Senate, gets shoved down, sent down the toilet. And then who knows what the next thing that they'll come up with to try to destroy this presidency. But hey, I get the whole thing about his personality, but how do you argue with things doing well? Anyway, all yours, Dan.
All right, thanks.
I don't record these things, Lou, because it would have been recorded on YouTube, but I tried logging into YouTube 2 times and it wouldn't go.
But it says live.
Well, then maybe it is. I don't know. You're right. I see that. I don't know. I'd have to open it up and see.
All right, all our opens are fine, so won't even worry about them. Let's go right to gappers here. This actually was a beautiful buy setup, but it had earnings this morning, so it's gapping down. But if it can still trade above yesterday's high and negate the gap down, then it looks good. Omer 1370, that's a bearish gap, but no great price void. You got all that support. Snops 132 and change. This one looks good. This has room to fall. Gap into the low end of the range under this green bar. Yeah, third, we'll watch it. SMAR 45 bucks. So a bullish gap to yesterday's high, but I don't like that ugly red bar there. SMTC, there's no volume, it's hard to tell. No, we'll do it right now. Hold on, sure. Shop was an amazing comeback. That's a stealth 15-minute chart. You totally missed your entry for a swing, but if it can go sideways up here, then 30-minute high would be a day trade. It broke its uptrend, right? What's an uptrend? Higher highs, higher lows. So right there, it failed to make a higher high, deep retracement. So it's either going to consolidate to go up or it's going to consolidate to go down. It's that simple. But right now, there's nothing to do with it. ESTC, 67 bucks. It's a nasty gap, but excessive. CMTL, 37. There's no pattern. TD, 56.80. Bearish gap, bearish pre-market, but no pattern. GMS. Can't tell where it's trading. AZZ, 40 bucks. Bullish gap, top of the range, but I don't like the way that trades. It's gonna delete you. Nike, Goldman came out, gave it a conviction buy rating. I think that whole upgrade, downgrade business is such a farce. Conviction buy. And it's a bullish gap here. 30-minute high, or we'll watch it as a put spread. Tillis 1150. That's a bullish gap, but excessive. Gap in 15%, but it has room on the weekly. Home 480. Ooh, that is pain. Wow. SPWH 779. Bullish gap. It's rested here for a couple weeks. So it burned off this steam. Has room, 9-10 bucks on the monthly. Mix 620, bearish gap. Looks lower, but you know, gap after 5 red bars. It's getting extended. Yeah, I got Sage in here right here. Down 92 bucks, 57. Wow. Yeah, you know, welcome to trading bios. Look at that gapping. Wow. That's what you get when you trade bios. McGraw sent me something saying somebody bought 200 put contracts on that for 25 cents, way out of the money. And I just responded to McGraw saying, Wall Street is so freaking crooked. You know, he's, you know, one trade and you're a millionaire. It just insults me. That's all you need. You just need inside information and one trade. As long as you don't get caught, you retire. Hey, Jency. Hey, Jency, do me a favor and put your drop down to all panelists and attendees. All right, let's continue with gappers here. So that one we said nothing. Like GMS, no pattern. HOV, no pattern. Jill, that's bearish, but it's $1.33 stop.